So in exercise 5-2, we're going to record journal entries from the supplier. So it's us buying our inventory from our supplier. And what I'm going to do is I'm going to keep a running total of my accounts payable, just because I find when I show the T account and what's going in and out, it makes the journal entries a little bit easier. So February 1st, we purchased $17,100 of merchandise inventory. Terms are 2/10 net 30. So if we pay in 10 days, we get a 2% discount. Otherwise, we have to pay it in 30 days. So I'll just do merchandise inventory, debit 17,100, and then accounts payable for 17,100. And just on this side, I'm just going to open up accounts payable. And I'm just going to post that 17,100 credit. Now on February 5th, I purchased for cash 8,300 of merchandise inventory. So this one is 8,300, and since I use cash, I don't post anything to accounts payable. So you use accounts payable if you don't pay in cash. My next journal entry is record purchase of merchandise for 22,100, terms 3/15 and 45. So I get a 3% discount if I pay within 15 days. Otherwise, I owe in 45 days. So when they give me the terms, it's a good indicator that I'm not paying cash right now, so it's going to go to accounts payable. So I'll do merchandise inventory, 22,100, and accounts payable, 22,100. And I'll move this credit, 22,100, into my T account. On February 9th, I record purchase of office supplies, 1950, terms N15. So I'm going to purchase on account, and supplies is its own inventory account. So don't put into the merchandise inventory. So I'll do 1950, and we'll put this into accounts payable because we'll pay later. And I'll also put this 1950 in here. Record the entry for placing of an order for 210,000 of merchandise in exchange of 25% trade discount to be shipped on April 1st, FOB destination. So this one might be a little tricky because all we did is placed an order. So we didn't actually receive any of the goods. So when it's FOB destination, that means we receive the goods when it reaches our warehouse. And then that's the time that we would record the order. So I'm just going to say no journal entry. Then February 11th, it says record payment made for merchandise purchased on February 1st. So let's go and see which one that was. So February 1st was the 17,100. So it was this one right here. So what I'm going to do is if we paid it, and we did it on the 11th, so I believe we just made the terms, so I can actually take the discount. So there's a couple steps you need to do. First, let's move this accounts payable off the books. So I want to record this 17,100 being paid. So now if it was in at 17,100, now it's out at 17,100. The next thing that I want to do is record the discount. So in this case, when we're dealing with our inventory accounts or things that you purchase, we're actually going to put the discount into the inventory account instead of recording a discount on the income statement. So that's another mistake I see people make. So if we just do 17,100 and multiply that by our discount, which was 2%, let's see what that gives me. That gives me a discount of $342. So that's actually going to decrease the original inventory amount. So we're going to put that as a credit. And then the difference is your cash. So what I would just do is take the 17,100 and minus the 342. And then that'll give us cash of 16758. The next one is record payment made for office supplies purchased on February 9th. So the office supplies were this one here, the $19.50. So that's this amount in accounts payable. So since it's just due in 15 days, we just move it out of accounts payable, $19.50, and then record cash. $19.50. So I'll just put this here, $19.50. So now what you'll see is I had it originally in accounts payable, and now that you pay it, you take it out of accounts payable. And then we're going to record payment made for merchandise purchased on February 6th. So if I go back to the 6th, it's this 22,100. So that's this amount here. And I'm just going to check that I did pay it within 15 days. Then I can get the discount. So the 6th, I'm paying it on the 23rd. So it actually took us longer to pay it. So we don't get the discount. So I still have to move this out of inventory or out of my accounts payable. So I'll record accounts payable 22,100. So that's this amount here. So now I actually have nothing left in accounts payable. So everything's paid. And then cash. So we didn't get the discount. So we had to pay the full amount. And now the question is complete.